Rental Robbie here, and how do you analyze real estate to know if it's a good investment or a bad investment? So I just found a property that was listed 7 hours ago, but how do I know if it's a good deal? So the first thing I do is I read the property details. So this is a 4-unit apartment complex, meaning that we can rent to each unit. One thing to take note of is that there's 2 1-bedroom units and there's 2 3-bedroom units. So the first step in property analysis is taking the purchase price. So I'm going to copy that. So I just entered the price, the down payment percentage, 2% for closing costs, and we can see our mortgage payment is $650. The next step is finding out how much we can rent out each unit. So I come over here and I'm going to copy and paste the location into Google, and I'm going to type in average rent. So you can see over here it's going to show you the price per unit. So I just click on this and I need to find out how much they're renting out 1-bedrooms and how much they're renting out 2-bedrooms. So we can see here that 1-bedrooms in this area are only renting out for $600 each, and the 3-bedrooms are $700 each. So I just entered in the rents for all 4 units, and you can see that brings in $31,000 a year in income. The next step is that we need to fill in the expenses. So what are the taxes, the insurance, the maintenance, and the vacancy? So when we go back to the ad, we can see our property tax and home insurance. So we just enter that in the spreadsheet as well. So one thing you could do is find out the utilities. Sometimes it will post on the ad what it is. If it doesn't, you can ask the previous owner or the realtor for the property. I also like to include 5% for maintenance and 5% for vacancy. You can see it's around 18%. It's probably going to be closer to 50% for the deal. So now the spreadsheet is automatically calculated. Yes, the property does meet the 1% real estate rule. So now we just check the summary for a breakdown of the property. So we can see our cash flow. That's how much profit you get to keep. The cash on cash return is how much of your initial investment are you going to get back in the first year. So in this case, it's 53%. Another key consideration is the cap rate. That's how it compares against other properties within the area. Now, if we scroll down, we can see a summary comparing the 3 different properties side by side. So we just entered one for property 1. Let's compare it with another deal within the neighborhood. So I just found another property within the same neighborhood. You can see it was listed 43 days ago. So let's compare it to see which one is the better deal. So same process. The first thing is we take the purchase price. Then we go down here and we can read what sort of property it is. So this one's a duplex. That means there's 2 separate units, and we can see that they're rented out for this amount. So I just filled out the second property. So I entered in the purchase price, the down payment. I did the same closing costs, and we can see our mortgage payment is now $557. So each unit is currently being rented out for $537. So I entered that there. I've also added in the taxes, insurance, maintenance, and vacancy. So does this property meet the 1% rule? Unfortunately, no, it doesn't. So chances are the cash flow is going to be a lot less. So same thing, we just scroll down to see the summary. This is a breakdown with our cash on cash return and our cash flow analysis. And you can see side by side, property 1 is significantly better in all KPIs. Well, that's it. That's pretty straightforward. If you guys want to learn more about real estate investing, make sure to subscribe for more content. And if you guys want access to the spreadsheet, you can get it here.